Hello everyone. It's been really a long time since we have posted our video. Um, Today I want to give you the Infosys Earnings Day option trading strategy. And before proceeding into the strategy, I want to give you the disclaimer that this strategy is for your education purpose only. Please do consult your financial advisor before taking this strategy. Okay, Infosys about to declare a result on 14th July, which is day after tomorrow, and I think the result will come post market hours. Hence, the market price action for the Infosys will be on the 15th July, which is Thursday of this week. Okay, as you can see, the IV has increased significantly today, so we can use this opportunity to short some of the option so that we'll get a good premium. At the same time, we want to see the open interest position for the Infosys so that we can come to know what exactly the other major player are positioning themselves in the Infosys stock. So this is the option Abstra. This is the Infosys current month open interest position. As you can see, 1600 call option has the highest open interest, but whereas the put option is very less in terms of quantity. Here the call option open interest is around 42 lakh 60,600 quantity, whereas the maximum open interest put option is just 14 lakh 85,600. I think you can say around one third of the put option is there, and also the second highest is 16,620 rupees. So it's more or less kind of a same case as TCS. As you know, the TCS announced its result last week, and the stock didn't perform well. In fact, it has dropped some 2-3 percentage if I'm not wrong. So market participants also expecting the same thing. They are expecting that the market may go down or it may stay at the current market price, but there is very less chances that it will go up. So that is what they are thinking. But according to me, given the current bullish scenario, I think market may not drop much. So anyhow, our objective is to earn money from the volatility crash as well as the theta decay, along with some protection on the downside, because the market is expecting the market may go down, but the market is thinking that the market may not break 1600. So that is the current market expectation as of today. It may change over a period of time, over a period of next 2 days. Okay, so what strategy I am going to do for Infosys? Let's go to the option Oracle. We'll see what is my strategy for the Infosys earnings. Let me add two rows. One is for the long call. We are going to go long in 1500 call, which is in the money. One lot, which is Infosys, one lot is 600 quantity, and I'm going to short at the money call option, double the quantity. So I'm getting a net credit. Hence, if you see the graph, this is the payoff chart. If the market drops anywhere to even to 0, I would make 11,000 rupees. If the market stays at where it is, I'll make the highest profit. Of course, this profit is on the expiry, not on the earnings day. That also I'll come to you. I know how much profit we can expect from this strategy. Okay, so our loss starts from 1600. As you know, the 1600 has the highest open interest of call option, and we believe that the market will not go below this. Okay, so before going to discuss about the profit loss on the expiry day, sorry, on the earnings day, I want to give you what you have to do. Suppose if the market breaks 1600, so there are two things you can do. Either you can go long in call option on the day of expiry, it breaks and goes, or you can go long in the future. By doing both the things, you can arrest your losses. By going long or going long in the future, you have to spend money, right? You need some margin, and for going long you have to pay the premium to the seller. To pay the premium to the seller, you can sell some put option at around 1500 or 1540. You can collect some premium and then you can use that premium to buy the call option. This is the kind of a risk mitigation. Okay, now let's see what is the profit we can expect. So we are about to get the earnings result on 14th. So I think 15th is the actual day. This is the 15th graph for the PF. So for 15th, if the market drops even slightly lower than 1558, you will start losing money. So if that is happened, you can start selling put option. That is the only option, only method by which you can mitigate the risk. But one of the thing is that as of now we are assuming that the volatility will stay same. But suppose the volatility drops by 10%, then you can see our break even goes to 1590 rupees. So that is what we are trying to capture. We want to capture the volatility crash as well as we want to capture the time theta decay for the next 3 days. Okay, I hope you like this video, and with this the maximum profit is 35,000, but as I explained to you, on the result day you may accept a decent return of 10 to 13,000 rupees per set of call ratio spread with this strategy. It is only 3 days to go, and with the current margin system of around, you may need around 2 to 2.5 lakhs for this strategy per set. So you will get 5%, which is really a good return on investment. However, when the risk comes, yes, the highest open interest there at 1600 and 1620, but market may try to surprise you on the upside. If that happens, as I told you, you can either go long in the call option or you can go long in the future. At the same time, you have to go and short the put option to mitigate the risk. Suppose if the market goes beyond 1600, then you may have to take this strategy till end of this month. Otherwise, you have to book a loss. That is also one of the thing. If you think that okay, I don't want to this naked position on the long side, you can go ahead and add one more leg long call at maybe at 1700 or even 1650, 60 or something like that. One lot. By that also, you can still create the same strategy, but your downside is limited. If your risk, if you are not ready to take the risk as much as we do, then you can go ahead and go long in 1660 call option right away, instead of waiting for the earnings and instead of waiting for the market to crash 1600. But we hope that it won't happen. But market is market; it will surprise all the time. Thank you for watching. We are signing off from